Okay, just now we stopped at the reason for the worldwide accounting diversity. At this part 2, we will continue on the problem caused by diversity and so much on. Okay. So, as in part 1, we said there are 6 main reasons why the accounting diversity exists. So, this actually, the diversity in accounting reporting is actually why we have to avoid, because it will cause problems. So, there are a few problems is actually caused by the accounting diversity, but we only focus on the 4 major problems. The first problem is, of course, because of the accounting diversity, we will have a problem in preparing the consolidated financial statement. So I hope you still remember what is the consolidated financial statement, and you have basically what is the idea why the accounting diversity will cause the problems in the preparing the consolidated financial statement. Number 2, the diversity in accounting reporting or in the financial statement will also raise a problem when we want to assess the foreign capital markets. Number 3, we will also have a problem in terms of comparability of financial statement, because of the financial statement in Malaysian country, for example, is different with the financial statement in Germany. So it's very difficult when we want to compare company A in Malaysia and company B in Germany. Okay. Number 4, lack of high quality accounting information. Okay. As you know, comparability will actually lead to the high quality or better quality in the accounting information. So since just now we said lack of comparability, and because of other reason also, the high quality in the accounting information is lack. We will look on this issue as a one by one. Okay. 1. Okay. In the preparation of consolidated financial statement. So the problems is actually due to different local regulation. For example, regulation in Malaysia will be different with the regulation in Germany. Okay. Number 2, because of the difference of local currency. In Malaysia, we use the ringgit Malaysia. In Indonesia, for example, we use rupiah. Okay, so the difference in local currency will create the problems, okay, in the preparation of consolidated financial statement. And of course, because of the local accounting principle. The accounting principle that we use in Malaysia is different with the accounting principle that we use that they use in Thailand, for example. So since these problems, there are problems, okay, in preparing the consolidated financial statement. So it requires considerable effort when we preparing. Okay, effort we have to look on 2 standards. Okay, for example, we want to consolidate Malaysian one report in the Malaysian company with its subsidiary, okay, in Thailand, for example. So the financial statement that recorded or that preparing in Thailand is using the local regulation, the Thai regulation. But before we consolidate the account, the subsidiary account, which is incorporated in Thailand, into the parent's account, which is incorporated in Malaysia, we have to look, or we have to translate this account into the Malaysian standard or Malaysian regulation requirement. Okay, same goes to the different local currency. Since we have to report in Malaysia, so we have to report in RM instead of baht. Okay, same goes when we use the different accounting principle. Okay, in the consolidated financial statement, we have to use the same accounting principle. So that's why we said it's need considerable effort. And this considerable effort, it's not come free. Of course, it will involve costs. Okay, when we do the translation, okay, we have to hire somebody that know more on which is expert in that area. Okay, which come to the requirement number 3, which is expertise in different country accounting standard. So this, of course, required additional costs. Okay. Number 2, just now we said we will have a problem in accessing to the foreign capital market. For example, a company in Malaysia try to access the US market. But before you access the US market, the capital market, you have to prepare the financial statement as required by the US capital market. Okay, so Sam, what will happen? It will need or require considerable effort, and of course it will involve cost, additional cost. Okay. Number 3, we said just now, comparability of financial statement. So, since each country will prepare the financial statement according to their rules, regulation, and standard, so we said there will be lack comparability between the financial statement. So what will happen? It will give the adverse effect. Towards what? 1, when we want to do investment decision. Okay, we cannot do the investment decision because we cannot compare company A in Malaysia and company B in Singapore, for example. Or company A in Malaysia and company C in Sweden. So it's very difficult to make a decision. Next, when we want to lend money to the company. When we want to lend some money, for example, we are the bankers or we are the investor. When we want to lend money to the company which is located in Netherlands, for example, we should be able to read the financial statement of the company. But since the financial statement of the company is prepared using the different standard that practiced by bankers which is located in Malaysia, so it's very difficult to do the lending decision. Okay. The third one is performance analysis. This is more on if you want to compare the if we have few company or we have few branches or we have few subsidiary companies. So let's say company A, which is incorporated in Malaysia, have subsidiary company in Indonesia called company B. Okay, B in Indonesia. Okay, so we have B in Indonesia. Okay, we also have C, for example, in Netherlands. And we have D in Japan. Both B, C, and D are preparing using the different rules, different regulation, and different standard. So when you want to do the performance analysis, it's unfair when you said B is much better than the company in D by looking only on the financial statement. Why? Because financial statement in B is preparing, okay, difference with the D. He said because of lack of comparability between B, C, and D, so it's difficult to do the performance analysis. Same when you want to do foreign acquisition decision. Company A in Malaysia, okay, want to acquire company E, okay, in Korea. But you cannot make a decision because you cannot compare the financial statement of E to the performance in some company. So this is when we set the comparability of financial statement will give the adverse effect. Okay. Number 4. Okay, the problem is lack of high quality accounting information. So, we said because of lack of high quality accounting standard, so we will face the inadequate risk assessment. Okay. It also will lead to lack of appropriate disclosure requirement. Okay, especially when we said just now, the country that practice court law, their accounting regulation will be in very general compared to the country that practice common law, which is specific and detailed. Okay, we also face the disclosure deficiencies. For example, related party transaction and off-balance sheet financing. Okay, high exposure to foreign exchange risk. Okay, investment in highly speculative asset, contingent liability guarantee foreign currency loan, and loan loss provision. So, if there are deficiency in the disclosing these things, okay, so we will face, or we will actually have a lack of high quality accounting information. Okay, so that is the what is that problem? Okay, mainly there are 4 problems because of the accounting diversity just now. Okay, next we will look on the accounting cluster. What is mean by accounting cluster? Accounting cluster, we just imagine like this. Just imagine in the world. So in the world, we will divide the world, okay, the financial reporting of the world, into the cluster. So this cluster, we divide the cluster according to accounting models. So basically, okay, there are 3 common accounting models that being practiced by the country in the world. The first cluster is the country that we said, okay, that have the accounting model, okay, which is we call as the fair presentation model or the full disclosure model. So this is the same name. Sometimes you will cross with the name of fair presentation. Sometimes you cross with the full disclosure model, but it's the same. So for this model, we call, it's also known as Anglo-Saxon or Anglo-American model. Okay, so this is the first model. So this model, the orientation of this model is toward the decision needs of large number of investors and creditors. So this model normally used in the English-speaking country, which is influenced by the UK or US. The second model is the legal compliance model, or this one we call as Continental European model. So this is the second model. So for this model, normally the accounting model in that apply or that practice in the Continental European model is it's legalistic. Okay, they will use the financial statement or the accounting report to provide information for taxation and government planning. Okay, and normally the Continental European model used in Europe, Japan, and court law countries. Okay, so this is basically practice in the court law countries, while this one, the one is actually practice in the common law practice, common law countries. Okay, as I said just now, you already learned about company law. You also learned about the commercial law. Okay? So my first question that you should think about, later on I will ask you. Okay. First question is, In Malaysia, which legal system that we practice? Did we practice the common law or did we practice the court law? Okay, so that is the first question, which will lead to the second question. Okay, for the second question, which accounting model that practiced by Malaysia? Either we practice Anglo-Saxon model or Continental Record model. So please think about this question and we will discuss later on in the MS Teams. Okay. The last model, okay, the third model is the inflation adjusted model. Okay. So this one, normally it resembles the continental European model, but what happens is, they will adjust the continental European model, okay, with the inflation rate. Okay, so this is the three model, okay, that being used in the worldwide. Okay, so this is the end of the part 3 of this topic. Second part of this topic. We will meet again in the part 3 of the video for this topic. Thank you.